that, as Terry indicated, have become very large and very significant financial players. And I'll just say this briefly, trade unions have an interest in making sure that the pension funds that are securing pension benefits are secure and generate a rate of return. That's how they are structured. And I would say there was at one time an ambition to try to gain more control over these pension plans, in part to protect the benefits, but also in part to gain some degree of control and guidance over the investments of the plans and the investments of the funds. And so I've played a role in some of this for CUPE, including through negotiating what we call joint trusteeship or joint governance of pension plans. And I've worked directly with some of our own members and colleagues from other unions that are involved in some of the largest pension plans in Canada that are structured jointly with trade unions and that are very deeply involved in the financial sector. I say that just to explain, through that role, I've taken up a very active interest in how the financial markets work and how financial institutions work, and what actual role pension funds are playing in Canada and other countries, and in particularly in Canada. And the case I'm going to be making tonight is that the role that especially Canadian pension funds have come to play, I would say especially in the last 20 years, is a role that is not widely known by Canadians or by pension plan members, and it is in fact quite disturbing. And it has changed quite significantly in the last 20 years. And I want to elaborate a little bit on how and why. And the path into this is, in fact, as Terry indicated, through this very serious situation in long-term care provision that we've all been, I think, watching through this pandemic. It's been on our front pages and nightly news almost every night. And I think we've learned a lot of disturbing things about long-term care provision, but we don't know very much about ownership and control and the profit aspect of this. And so that's what I want to talk about tonight. And at the end of the day, it's going to get me back to speaking at the larger level about what the private ownership and investment in long-term care signifies for what Canadian pension funds are doing. And I will extend it at the end. It won't be elaborated at length, but I'm going to extend it to the problem of financialization and maybe financial power, and in the context of climate change. This very serious problem that I know you all in your organization are concerned about, as I am, and as I think growing numbers of people are very gravely concerned about, because I think these problems and this particular context overlaps and is very relevant. So that's my plan. That's what I'd like to talk about. I've got about 12 or 13 slides, and I think I'm going to be able to get through them, hopefully in less time than the 45 minutes Terry indicated. And we'll have a good opportunity to follow up with some questions and discussion, I hope. So I hope that sounds okay. So let me get rolling. I'm just going to adjust my screen a little bit. Let's just talk for a second. My path into long-term care is really through the pandemic, the COVID-19 pandemic that we are all living with and dealing with and responding to. That's why we're on Zoom tonight and not having an in-person meeting. I want to start by saying that, in my view, the COVID-19 pandemic has shed light on several, probably many things, but there are a few things that I want to draw particular attention to that I think have become very clear lessons or new information, new perspectives that the pandemic has given us that we might not have had otherwise. I'm starting with a list of 4 things. First of all, low pay, poor working conditions, a lot of part-time and precarious work, and poor care capacities in our long-term care system. That's patently clear, I think, to most of us. Secondly, even outside of long-term care, our health systems, even outside of long-term care, most workers, far too many workers have no access to sick leave or very limited access to sick leave. And that fact itself, it has been a factor, has actually been a vector for transmission of the virus. And so this kind of workers' rights issue is also a pandemic issue. It's also a serious problem, not just for the workers themselves, but in fact for all of us. Thirdly, our health system itself has been underfunded in many ways, especially in Ontario. Ontario has the smallest number of hospital beds, acute care beds, of any province on a per capita basis. And this has led to a number of problems, including a lack of pandemic or infection preparedness, a lack of adequate infection control systems in healthcare, and other related problems related to underfunding. And fourth, and this has come up just recently in the context of the vaccine issue, our whole health system has become increasingly dependent on the role played by private, for-profit, corporate actors. That's true not just in our long-term care system, which I'm going to talk more about, but also in the world of pharmaceuticals and vaccines. It came to light recently that Canada at one time had a publicly owned vaccine company, a production facility and capacity under the name cont'd Labs. This was privatized by the Mulroney government in the mid-1980s. And if anybody's interested to look at that, people like Linda McQuaig and Colleen Fuller have done research and reporting on that. This was very condemned at the time when they did that in, I think, 1985. And now we see consequences we might not have anticipated. But other reliance, PPE, protective equipment, masks. We all saw the headlines around the inability to get N95 masks from anybody except for 3M in the United States. And then Trump blocked it at the border. I think all of these things underline that a lot of our health system, a lot of health goods, vital goods and services have been privatized over the last 30, 40 years. And we were told that this was going to be more efficient and safe and would not involve risks. And I think this pandemic has underlined for us that that was not true. So I think there's really powerful lessons here. Zeroing in on long-term care, just to point a couple of statistics. As I think probably we all have absorbed over the last number of months, Canada, the Canadian situation and sort of performance in long-term care has been particularly terrible. There's been some studies comparing, in particular, the death rates from COVID-19 and where they take place in the OECD, the high-income countries. And in Canada, it's more than 80% of COVID deaths have taken place in long-term care. That is by far the highest concentration of the OECD countries that have been studied. I believe 17 OECD countries were studied, and Canada is the worst performer there. And important to register that long-term care, as I said, in Canada, it's a mixed system. And in fact, in Ontario, it is the most mixed, with the largest portion of provision being private, corporate, chain provision through companies like Revera, Chartwell, Extendicare, Sienna. These are names that we've all been hearing about lately. My attention is going to be to talk about one of these players in the long-term care sector, long-term care industry, and that is Revera. I'm just going to hold that for a second, though, and move to my next slide. Before I turn to Revera, I just want to make one point that maybe has been absorbed by everyone, but maybe not. Just a little bit further about the decision over the last number of decades to move more and more of long-term care provision into private for-profit management. As I say, this was, recommended or accepted particularly by, I would say, more conservative governments that are more disposed to private sector models for a range of things. And we were always assured that this would be, just as good as public provision, and there wouldn't be any substantial difference. But in fact, if you look at the research, this has not been the case. Research has shown that there, on a number of measures, performance and outcomes in for-profit long-term care homes underperform compared to public. And this is an interesting study. Was published by the Canadian Medical Association Journal in August. I think it was published. And it was a comparison of specifically the performance of the different models. There's 3 different models: public, not-for-profit, and for-profit long-term care facilities. And this study from CMA Journal did a data comparison and basically showed that, in fact, the performance of the for-profits was far worse. There's a very significant concentration of deaths to COVID in long-term care in the for-profit facilities. In fact, they concluded in their comparison that if you just compare the for-profits to the publicly owned and managed homes, the death rate in the for-profits is 4 times higher. And I would say, this hasn't been measured and collected yet, but over the last 2 months, I mean, that was based really on the first wave. In the last 2 months, my impression is that this ratio has either been maintained or possibly even been made worse. Now, this same journal article from August pointed out that this shouldn't surprise us if we actually have followed the performance of for-profit long-term care going back before the pandemic, because in fact, research has shown that the performance is sort of chronically worse, lesser. And one of the observations that they made at the beginning of the study was as follows. They say they review research, academic and medical research, on the comparative performance, and they conclude that observational studies suggest that for-profit long-term care homes tend to deliver inferior care across a variety of outcome and process measures, including lower levels and quality of staffing, more complaints from residents and family, higher rates of emergency department visits, more acute care hospital admissions, and maybe most importantly, higher mortality rates. Evidence from the United States suggests that for-profit long-term care homes are also more likely to receive deficiency citations for infection control and hand hygiene practices. Okay, I think that is vitally important for taking stock of what's going on in Ontario and Canada through the pandemic, and kind of taking stock of this ownership structure, this for-profit ownership structure of our long-term care facilities. And to talk about that, I want to zero in on really the centerpiece of this discussion and the connection to pension plans, because the second largest for-profit corporate chain long-term care provider in the country, and I think we've all heard at least some reference to this, is this company known as Revera. And that's what I want to talk about, because Revera is, as I say, second largest provider of long-term care. It also owns and operates retirement homes that are not formally healthcare. It's a bit of a complicated sector, but they are definitely the second largest owner of long-term care in Canada. And they also own homes, long-term care in the United States and the UK. What is less known is that, in fact, the ownership of Revera, unlike Chartwell, unlike Extendicare, which are kind of traditional public corporations structured either as share companies or as real estate investment trusts, Revera is owned by a pension fund. And in fact, it is the Public Sector Pension Investment Board, or PSP, and I'm going to use that acronym. PSP owns Revera, and what is interesting and important, PSP owns Revera outright. 100% of Revera is owned by PSP. Now, who's PSP? PSP is a federal crown corporation that is charged since 1999, charged with investing the money of federal government employees, basically federal public service workers, military, RCMP. Their pension plans cycle money into this federal crown corporation called PSP, and PSP does the investing. It was only established in the late 90s. Before that, these pension plans were in fact not financialized, not in the financial markets, not doing any damage to anyone, and there was a different financing system. But Paul Martin and the Chrétien government of the time decided to change course and to financialize that pension plan. One of the first big investments that PSP made, of course, they started with traditional stocks and bonds, the way that a lot of us think that pension plans invest. But around that same time, early and mid 2000s, the large pension funds started to shift their strategy in a way that is not widely known. And what that means is they started to move into what is called alternative investing. This means private equity, hedge funds, real estate, direct ownership stakes in companies and operations and facilities in Canada, but also increasingly outside of Canada as well. And that's different because what that means is that PSP buys an existing chain of long-term care facilities that was mostly Ontario-based, and then they own and operate it. It is PSP. It is an extension of the investment board, which makes PSP into something more like a conglomerate company rather than what we might think of as a pension fund. Interesting to point out that they did this, these private corporate chains that PSP ended up buying and transforming into Revera in 2006, themselves emerged from a very important political and policy shift process that came, as I said before, out of Ontario in particular, when the Harris government, that was determined to cut their spending and to privatize in a number of areas. Long-term care was one of the areas they definitely wanted to shift to more private provision, and they did that. And a significant shift took place under the Harris government in the late 90s, early 2000s. Interesting to note, as people may know, that after his resignation and departure from politics, Mike Harris, the premier who had done that shift in policy, became the chair of the board of one of the big long-term care for-profits known as Chartwell. And he is still today, I believe, the chair, or at least on the corporate board of one of the big for-profits. And interestingly, so one PC former premier, there is another PC former premier, Bill Davis, who has been involved in Revera back to even before Revera was established in 2006 on the board of directors. That's relevant just because there is a definite direct connection and relationship between politics and government and this sector, not only in creating the sector as more provision has been privatized, but also through these direct roles and relationships. Even Ernie Eves, who was briefly premier, briefly became involved in one of the other companies in this sector. So this is important to take stock of, and I think we'll come back to this. The last point on this slide, I just want to say that, this picture, this structure makes Revera into a very strange kind of company because it's owned by a pension fund, and the pension fund itself is legally structured as a federal crown corporation. This means its board, PSP's board of directors, is named by the federal cabinet, by Justin Trudeau, and currently the federal Liberal cabinet. The federal government has a direct role and relationship with Revera through this peculiar structure. And I'll come back to this. I think that's very relevant given some of the politics of what we've been seeing about federal and provincial jurisdiction. I'll go through this quickly because I don't think I need to go over this, but I'll just say Revera is, I think, a very significant thing or a very significant player and actor in this sector and in this crisis, in part because it certainly looks to me like the deaths in, I mean, I've already said that the deaths in the private for-profits have been very disproportionate in the for-profits compared to the public. I would argue that once the dust settles and we're able to look at the data, it looks to me like the performance in Revera homes is going to end up being possibly the worst of all. And this shouldn't surprise us entirely, because I know actually from being involved in CUPE that Revera is a very aggressive employer. These companies are partly unionized. They do deal with unions, but the workers involved in the long-term care sector, especially nurses, healthcare aides, PSWs that we've heard a lot about, these are workers, primarily women, and disproportionately racialized women, many migrants or immigrants, people from different countries. Their pay rates and working conditions are atrocious. They are just terrible. And they've been struggling to try to improve them for a number of years. And they've been trying to do that in the face of very aggressive opposition on the other side of the bargaining table in unionized environments. And they're very vulnerable if they don't have a union at all. And I won't explain the details. Maybe we come back to it later, but there was a recent crisis in Winnipeg that briefly was on the national news that some of us followed, at one home in particular, where in the space of 48 hours, there were 8 deaths. There was a terrible situation one night when a group of paramedics were called to the Maples home, and what they found was an utter disaster, understaffing. They found residents who were hungry, had not been fed, dehydrated, had not been given access to water, and they found 2 dead bodies that had already had clearly been dead for some time. It was very clear that the short staffing had very grave consequences for those residents. And I guess I won't go on about it, but I think we need to think about, like, why would a for-profit home allow this kind of short staffing? And I think it is systematic and chronic. And at one level, it's logical when you think about, to the extent that you're able to save money on your staffing, the less you pay in your staffing, the more money is going to flow into profits and dividends for shareholders. This is a very serious problem, because it gives management and owners an actual interest, a financial interest in minimizing their costs, including their labor costs. And I think that problem becomes very visible in a situation like this. I'll turn and talk just a little bit about the politics then, about this picture, because more disturbing things have even been happening in the last couple of months. It's become very clear that Revera, alongside other for-profit companies, have been, they have been trying to deal with this situation, but rather than dealing with it by, calling an emergency and making sure that they are fully staffed, instead, what they've done is worked very aggressively, hiring special lobbyists with connections to the Ford government in Ontario and sending them to lobby the government on their behalf. And one of the things, as people, some of you may know and have seen in the news, one of the achievements of that lobbying, just in the last couple of weeks, on Monday, November 16th, so what is that, just a couple of weeks ago, Ontario passed a fast-tracked bill in the legislature known as Bill 218. And what Bill 218 does, it's incredibly disturbing what Bill 218 contains. Bill 218 is this immunity legislation, which basically provides that a long-term care home provider, in the event that they are subject to legal action on the basis that they were negligent in a way that caused death by COVID-19 through this period, that legal action after the passage of Bill 218 will no longer have any validity. It will no longer be legally permitted to charge a long-term care operator with negligence causing death by 218, even when there is evidence, clear evidence, that there was negligence causing death. The bill actually legalizes negligence causing death by COVID-19 on the part of long-term care providers and anyone else. The only way that you could still face legal action is if you can prove what the bill defines as gross negligence. And gross negligence is basically, you would have to prove that the negligence that caused death was directly intentional. Like there was an intention, it was basically a case of murder. It was an intentional act of negligence causing death. That's basically never really going to be provable. So the effect of this bill is to really legalize negligence. That was a result of the lobbying engaged in by Revera and the other for-profit companies. Now, this is a dark and disturbing picture, but there is some good news, and there's some interesting and I think really important developments here, because to my mind, this Revera example is maybe one of the most disturbing examples of what I call pension fund capitalism, where a pension fund, like a workers' pension fund, their money has been pooled and channeled into a structure that has ended up harming people. And in this particular case, actively involved in a process of supporting the private for-profit provision of vital and sensitive public services in a way that I think was harming people before, but now quite visibly has proven that it is not an appropriate way to structure this. And of course, as a company, they are operating politically. They not only engage in lobbying, the company even makes financial contributions to the Progressive Conservative Party, the Liberal Party, various political parties. It's a very political actor in that sense. And this is a workers' pension fund. This is a very strange and challenging situation. Now, the good news, as I say, I'm just going to do a check on my time. The good news is this has provoked very deep and serious concern amongst many of the members of that pension plan, including people that are active in the largest trade union representing federal public service workers, which is the Public Service Alliance of Canada, PSAC. They watched what was happening in the first wave of COVID, and they said, this is just not acceptable. They had communicated with PSP and with government and expressed concern prior to this. But by the time of May of this year, they reached a point where they said, we can't just sit by knowing that our pension fund is involved in this. And they issued a statement at the end of May, which is available on the PSAC website, which actually called on the government and called on PSP, this manager, to transfer ownership of Revera into public hands, to basically nationalize Revera, which is about a $3 billion company. This is no small issue. And what that signifies, I give PSAC, I'm not a PSAC member or staff person, but I give PSAC tremendous credit for doing this. Because what they were saying is, we know this may be a very profitable operation, but we don't think in principle that this is a legitimate and healthy and safe and fair way to be generating profits. And we don't care if it might be slightly damaging to the profit rate or the rate of return on our pension fund. This is something that should be publicly owned, and we are calling on the governments to make this happen. That was May 26th of this year. Subsequent to that, the second largest public service union, which is called PIPS, Professional Institute of the Public Service, they joined that call in September saying, we agree. We also think that Revera should be made public. And, I was involved through the Ottawa Health Coalition and some other organizers in basically building up a kind of campaign, which we called Make Revera Public. It's not kind of any one organization. It's a number of healthcare campaigners, trade unionists, pension activists, federal public service workers, trade union activists, have all been joining this campaign. And, frankly, I think it's very significant because it is probably the most significant challenge to this kind of aggressive for-profit pension fund ownership that we've seen yet. So I want to quickly expand the lens to beyond just Revera, and in fact, even beyond just long-term care, because I care now very deeply about long-term care, but I care about many other services and public goods, public infrastructure that are actually also targeted by not just the PSP. This is not a unique problem to that pension fund. In fact, I would argue that almost all of the large Canadian pension funds, and Canadian pension funds are especially large, almost all of them are deeply embroiled in similar disturbing forms of privatization of public infrastructure, public goods, public services. And I've given on this slide just a few examples. The list is actually extremely long, and I wouldn't have time to go over it all. But, Highway 407, and I was thinking about your group and your organization. I don't know if you talk about privatized toll highways and the environmental kind of relevance of that, but the CPP, Canada Pension Plan Investment Board, is the majority owner of that toll highway alongside a Spanish partner, which owns 43% of 407. But CPP is now an enormous $400 billion operation, and most of the CPP money is invested outside of Canada. And I would argue doing disturbing and damaging things, both in terms of public infrastructure and also environmentally, to connect this to fossil fuel infrastructure and production and exploitation and other things. OMERS is the big municipal school board workers pension plan that a lot of CUPE members, the union that I work for, belong to OMERS. I could give a lengthy list of the disturbing things OMERS is involved in, but I'm just going to mention one. And I know that some of you in Haliburton are interested in water, protecting water, probably defending public ownership and control of water. Well, of course, in some countries, they have privatized their water systems. And one of the things that OMERS has bought up in the last 20 years is a big water utility that was privatized by the Thatcher government in the late 80s, early 90s, one that's called Thames Water. And there's all kinds of problems with this private for-profit management of that water system. But one of the bitter ironies of OMERS owning Thames Water is not just the environmental and ecological consequences. We got contacted a couple of years ago by a trade union representing Thames Water workers. And they contacted CUPE and some other unions across the water saying, is there anything you can do? We just found out that OMERS is one of the owners, one of the significant private equity owners of our company, of our employer. And our employer has just launched an attack on our pension plan. They want to get rid of our defined benefit pension plan because they argue it's cheaper and less risk and so forth. Well, that's an incredible irony. A pension fund that is only pooled because there's a defined benefit pension plan in Ontario. As an investor, they're seeking to destroy pension coverage for other workers in other countries. And of course, this is the kind of thing that is not going to hit the headlines in Canada, and it doesn't. I won't give the others because I don't want to take too long on this, but there are a number of painful ironies with, for example, the Ontario Teachers Pension Plan, which I'm guessing you all know is one of the largest in Canada. I think they have maybe $180 billion in assets these days, so very large. They've invested in water utilities in Chile, where there's a powerful social movement against private ownership of their water system. And it is the Ontario Teachers Pension Plan that owns that system. I've actually been to Santiago, Chile, talked with Chileans who are active trying to get public control of their water back. And their adversary in that case is the Ontario Teachers Pension Plan. This is something that most Ontario teachers have no idea what their pension plan is doing in Chile. Maybe I'll stop there. In terms of the list, I could go on. In some of my writings, I've given longer lists of how embroiled these large, especially these 8 largest Canadian funds are with all of these things. And in fact, they are so big and so significant in the business press in New York and in London. They refer to these 8 pension plans as the Maple Revolutionaries. And they refer to something called the Canadian model of pension plan investment management. And what they mean by the Canadian model, I think I might have it. Yeah, I have a whole slide on this. I'm not going to go through all the slide, but what they mean by this is pension plan investment strategies that rely very specifically on these aggressive direct ownership, private equity ownership, managed in-house. They're not farming the money out to Bay Street or Wall Street. These pension funds, for the most part, are managing these funds themselves. They've become money managers, asset managers. They're not farming it out. That's a Canadian innovation that other countries are looking to reproduce. I think those are the key. Yes, and one of the things that goes with this model, there is so much at stake in relation to public policy that these pension funds have also become very powerful political actors. And one of the key illustrations of that, just in the last few years, some of you may have heard about announcement from the government of Canada of a new Canadian infrastructure bank, the Canada Infrastructure Bank. That was announced in 2017, put together 2018. That itself was a result of pressure and lobbying from these Canadian pension funds that really want that infrastructure bank to help them put deals together to take over more public infrastructure, to get privatization deals going where they can allocate their investment dollars into these areas. And I won't go over this slide entirely either, but I really want to illustrate. I'm just going to do a time check. Have I still got a few minutes, Terry? Just it's 7:52.
Yes, you do. You still have a few minutes.
Okay.
I don't think anybody's going to be particularly upset if you take an extra 10 or so.
Okay. Well, I probably won't go 10, but I'll probably take 5, just because I'm near the end here, and I want to get to the climate environment thing. But this slide I added last, and this is very powerful to me because it gives us a couple of little glimpses of the thinking in the leadership of these Canadian pension funds. This is very rare. These executives and leaders, they operate, behind closed doors, behind the curtain. We don't generally see or hear very much from any of them. But once in a while, they'll make a statement to the press or a speech that we can get a little bit of a glimpse of their thinking. And I've collected together a few citations which I think tell us really everything about the thinking in this dynamic. So I'll just give a couple of them because they're powerful. Jim Leach, people may have heard that name, high profile former executive at Teachers, said, this is now a while ago in 2007 when these processes really started to roll. He said about public policy, he says, it's really a matter of the political will to have assets that in Canada have traditionally been held, sorry, I'm just gonna move my thing, traditionally been held in government hands, turned over to the private sector, Mr. Leach said. We've encouraged Mr. Flaherty, and it's good to hear that government policy is talking about taking definitive steps. In other words, this is the Teachers Pension Plan CEO stating openly to the Globe and Mail that they're in a process of encouraging the conservative government of Stephen Harper and Jim Flaherty to privatize more assets, more infrastructure. Skip forward to 2016, an investment manager, also with teachers, says something similar, but a little bit different. He says, Canada is not used to the private model. In Europe, for example, we've invested in London City Airport, Birmingham, Bristol, Brussels, Copenhagen. We've invested in Sydney Airport in Australia. It's a much more accepted way of operating those kinds of assets, he says. This is Ron Mock from Teachers. Quote, in Canada, I still think there's a ways to go. I think in time it will become a more accepted model, and in time I think it will become a necessary model for Canadians to adopt. This is, again, teachers saying, we're in a process of persuading government that privatizing existing public infrastructure is the way to go. And I'll just mention this quickly. I won't give the whole quote, but even as recently as 2 weeks ago, those of you that follow the Globe and Mail may have seen a very bold statement from the CEO of the Canada Pension Plan Investment Board, who doesn't actually speak publicly very often about these issues. But he basically made a bold statement about, look, Canadian government, we want you to sell more of your infrastructure. The way the Globe summarized it, he says, Mark Machin says that cash-strapped governments around the world should be putting airports, toll roads, utilities, and other infrastructure up for sale to ease their current financial pains. And Machin says, in direct quote, there's so much capital chasing private assets that if government wants to raise money, they'll get incredible prices for infrastructure assets, operating and revenue-producing infrastructure assets. Wherever you are in the world, there's a ton of capital that will go for it. This is the CPPIB, our pension fund, their CEO, going into the Globe and Mail and saying, please privatize more of all of this public infrastructure because we want to buy it, own it, and operate it on a for-profit basis because it fits in with our investment model. Just to maybe further illustrate the point that this isn't just Canada and it's not just a kind of an exceptional couple of executives of these funds. I've pulled out a slide that shows the membership of an international organization known as the Global Infrastructure Investors Association. And this is a body that basically, it's Europe, North America primarily, and they're basically involved in lobbying governments and international bodies, arguing for more privatization of public infrastructure. And when I say public infrastructure, I mean all of it. That includes healthcare, education, water, all of the most sensitive infrastructure. These people want to own it and operate it on a for-profit basis. And it's a powerful slide because if you look through it, you'll see the names of these same pension plans I've been mentioning: Teachers, CPPIB, Caisse de dépôt, OPSU Pension Trust is there. They are members of this association and they're working alongside, who else is here? Well, of course you have Goldman Sachs and Morgan Stanley. Like, these are the most aggressive, predatory Wall Street investment banks that have been roaming the world doing terrific damage in multiple ways. This organization is a partnership of these organizations. And for me, this is very powerful and very revealing. I'm going to wrap up now, move to my last couple slides and say, look, this problem that I call pension fund capitalism, it's not the only problem we face. It's actually one component of what we've been watching, which is in some ways the privatization and the financialization of virtually everything. There is almost nothing that can't now be privatized and financialized. And this is a very serious problem. And I would argue, and this is kind of my gearing to wrap up, I would argue this is a serious problem for public services and things like long-term care, healthcare, education. But it is also an ecological problem for those of us that are trying to have climate change problems addressed, because this is a process of losing even more control over investment processes, over policy processes that would be, central to any serious plan or system for addressing these problems. So my last slide just says, tries to wrap up saying, what do we do? How can we challenge or respond to these, very daunting and huge problems? And this is not easy, but I think there is some limited and wrong-headed thinking that I think we want to challenge, and we want to really take this on as fully and frontally as we can. So I've just said three things here, and then I'll stop. The first thing is I want to argue, going back to one of my first points, the labor movement, I would say the left, because I see myself as part of the left, needs to face up fully to the limitations of the strategies we've been using so far. Ideas around shareholder activism, gaining more joint boards of trustees to try to oversee these boards. This has translated into almost no substantive power or change to investment policy. If anything, it is in fact some of the jointly governed boards like teachers and OMERS that have been doing some of the worst damage. I don't think that's a promising path to solving this problem. Second point, there is an ongoing process of commodification and privatization of the full range of things that historically we fought to take out of the market, including in particular healthcare and education. And we need to fight that. We actually need to double and triple our efforts to stop commodification, stop privatization, and regain social and public and democratic control over these things. To my mind, the Revera case and long-term care is a glaring and stark example of how we can't fix this problem, I would argue, and leave these companies, leave these facilities in private for-profit hands. And then just the last point, just to get even more ambitious and finish with some drama, I would argue that these problems relate to a private capitalistic financial system that is in some ways inherently predatory and destructive, in not just socially, but also ecologically. So I would argue we need to actually gain social and democratic control over finance and investment itself. And I would argue it's not going to be through pension boards in the ways that we've seen. It's going to be through much more ambitious restructuring and re-engineering, and it will probably mean making finance itself into a kind of a public utility so that credit and loan operations can be guided by social and ecological principles and priorities that can be democratically worked out, not left in the hands of these corporate executives and the existing machinery of finance. So I'll stop there, Terry. I sorry I went on a bit long, but I hope that's a bit provocative and hopefully a bit new for at least some of you. And I'd be very keen to chat or have a bit of discussion about any of this.
Okay, I want to thank you, Kevin, for this presentation. I'm a bit overwhelmed by it, actually, in terms of the size and complexity of the problem. So I just want to say to everybody who's been listening, is that in the chat box, I don't know if you guys can see this or not. Maybe you can let me know. There's a couple of questions that we asked the coalition to put together. That is the Halliburton City of Kawartha Lakes Long-Term Care Coalition to draft for us to put to Kevin tonight. And can people see those things? Can you just show me a thumbs up if you can see them? Maybe you can't. So I'm going to just read these questions, one of which comes from Bonnie Rowe, and the other one comes from Dorothy Owen, as far as I understand. So Kevin, I'm going to ask you these questions in sequence. this comes from Bonnie, I believe. What is the best tactic you would advise for advocacy groups such as the coalition, the local coalition here, and others to challenge the unconscionable profits Revera and other for-profit long-term care companies are making at the expense of staffing and the quality of care for seniors?
Excellent question. And as I said briefly, I am energized by the fact that there is this campaign underway, and it's really quite historic. The two trade unions that I mentioned, PSAC and PIPS, that have issued this challenge about Revera's ownership and this demand that it be transferred into public hands, that's never happened before. And it has generated support from allies and partners like the Ontario Health Coalition, which some of you may know of, some other trade unions and others. But I want to underline, I would say they desperately need our help because they're not going to be able to do it on their own. Like, this kind of campaign around Revera needs to take off and sort of catch fire across the country. And so I would actually, and I didn't bring it, but I would encourage you, it's an easy Google. There are a couple of very easy things. If you Google Canadian Health Coalition and Revera, there's an online letter that anybody can go, and it only takes 2 minutes. You can sign a letter. What that letter does, it was organized by us, Ottawa Health Coalition and Public Service Alliance of Canada. It creates a letter calling on the federal government to transfer that ownership from PSP into public hands. And it automatically gets copied to, I think, 2 cabinet ministers and your own local MP. Also, feel free to communicate with your own local MP. This is a federal issue. It's not just a provincial issue. And a lot of federal MPs and government officials are trying to say, oh, well, we have nothing to do with Revera. Meanwhile, they actually do. And this is something that I think a challenge can be brought forward on. And I want to say that's in some ways very important and politically helpful, because if this were something that was owned and governed by the Ford government, I would have absolutely no expectation that there'd be much to be gained by lobbying them or phoning or emailing them. The federal government, you know, many of us are critics and skeptics, but they at least have positioned themselves differently, claiming that they're going to examine the long-term care structure and problem. And they said, Chrystia Freeland, the finance minister, actually said at one point, everything is on the table for addressing the problems in our long-term care system. So they haven't even dismissed the possibility of looking at something like this. But the question is going to be, will there be social pressure built and applied on the federal government about this? And that's up to all of us, I think, to try to generate.
Okay, thank you for that. The second question, I believe, comes from Dorothy Owens. So it's we are now well into the second wave, and once again, seniors in long-term care are dying in large numbers. How might we engage in a COVID fatigue? How might we engage a COVID fatigued public to respond to this horrific information? It seems at times that people may be overwhelmed and reluctant to engage in change.
Yeah, and I totally agree. I mean, I think we're in a very unique, and of course, everybody says unprecedented kind of circumstance. But I guess the one thing, you know, there's lots of negative things to say, lots of negative things about this experience. But I would say this, and some colleagues and friends who have been active on long-term care and healthcare advocacy for decades, they're saying this pandemic, this COVID-19 situation, the tragic nightmare of some of the circumstances in long-term care has created an opportunity for us to potentially fight for some substantial structural changes in this system that a year ago would not have been even imaginable. So I'm arguing that, you know, if we're, you know, strategic and smart and build our coalitions larger and larger, I think there is an opportunity here. I mean, just to mention, and I didn't say this before, I talked about unions, the provincial NDP in Ontario and the federal NDP. I don't know if people saw this. The leader of the federal NDP, Jagmeet Singh, was on Parliament Hill 2 weeks ago, literally calling on the federal government to make Revera public. He even used that phrase. That was remarkable for me. So this has some momentum. It has a certain amount of energy behind it. But as I say, it's only going to continue if we can kind of harness the anger, the frustration. I mean, I know people who have relatives and loved ones in Revera facilities, and they are desperately trying to think about what can I do to improve this situation. There's some immediate short-term things that a long-term ownership change isn't going to help. So there's some crisis intervention that's needed. But I would argue, and maybe I'll make this in a pointed way, the fact that provincial governments in Ontario and Manitoba in particular left these facilities in the hands of these for-profit managers, including that Maples and Parkview home in Winnipeg, where dozens of residents have now died. And then they discovered that they were massively, chronically understaffed. The management of those facilities, they knew they were understaffed. In fact, just to add this point, after that paramedic situation that found the nightmare of terrible understaffing and people dead in their beds, the next day, the press conference was organized, including Revera. And an official from Revera actually lied to the media and to government officials, claiming they were fully staffed. And it actually fell to nurses and CUPE members and frontline staff the next day. They were saying, no, that's not true. We were there. There was less than half of the staff were on the floor that night when all of this nightmare was happening. And so then the next day, Revera had to come forward. Oh, well, we were misinformed. We apologize. We have to correct the record. You can understand why they might be inclined to lie and misinform the public. But this is atrocious. And I would argue, we sometimes have problems in our public health system, but if that facility had been taken over by the government of Manitoba or put in the hands of their public hospital system, that lying wouldn't have happened. And I would argue the situation would have been immediately improved. They would have been far better staffed, and there would have been less deaths. So the urgency of this is quite serious.
Okay, so there's a question from Keith Hay, and this has to do with, he's asking about the difference in labor problems between for-profit and not-for-profit or municipally owned long-term care facilities. This is something that you mentioned a number of things. You mentioned the workforce and the fact that it was a contingent workforce, and that there's precarious employment. Can you just say a couple of things about the differences that you've noticed between for-profit, private, municipal, those parts of the sector in relation to those kinds of staffing issues, for example?
Yeah, I can say that briefly, because I have, as part of this research, I've done some reading of some of the literature, and we are fortunate in Ontario to have some very important and serious researchers have been dedicated to examining this system and doing comparative analysis of the long-term care system in Canada compared to the United States, the UK, Sweden, Germany. Pat Armstrong, who sometimes is in the media talking about these issues, she has led a research project over more than 10 years. And what that research tells us about staffing and frontline work circumstances is, as I say, it is very clear, and it's not just in Canada, in other countries as well, there is a persistent inferiority of wages, working conditions, and care standards in the for-profits compared to not-for-profits, and especially compared to publicly owned facilities. But I want to add a point here that I didn't have a chance to make before. They themselves, the researchers who know this area, will underline and emphasize that when we compare the existing for-profit operations to existing public operations, in some ways it's not entirely a fair comparison, because the public facilities, they themselves, their ability to deliver appropriate wages, care standards, working conditions, has actually been pulled down by the existence of the private for-profits. When you look at their wages and their circumstances, they have a comparator in the private sector that doesn't exist in some ways for, let's say, public hospitals. And so the point is, if this were entirely a public system, governments and administrators would be free to simply prioritize care and quality of outcomes and ensuring decent compensation for the frontline workers and decent living circumstances for the residents and the family members that are associated with this industry. The fact that you've got this predominance of for-profit operators has a significant drag effect on all of these issues. And inevitably, public homes, public managers are going to be compared to their private sector counterparts. And I would argue this is a significant problem. And if we were to succeed, I talked a lot about Revera, but of course my goal, and most advocates are wanting to see all of these for-profits taken into public control and public ownership. And I would argue if we had a chance to do that, we could immediately lift the working conditions, the wages of these mostly women workers who, and in fact, very significantly part-time. It's mostly workers that would like to have a full-time job, but they're stuck in part-time status. Many of them have been in 2, 3, 4 different jobs, 4 different facilities, running all over the place because they're not offered full-time work just to survive. This has a terribly destructive effect on their work lives. And guess what? Come pandemic time, they were a serious source of transmission home to home, obviously. Like this was, when you think about it, that was really stupid to organize a labor regime that would be so precarious, so part-time. And part of the fact that people are prepared to do that work is desperation. Like this is part of the overall kind of problems we have with our labor system. So I would argue that making this a public good, a public service, would give us the opportunity to actually reshape and in a lot of ways revolutionize this part of our healthcare system that's been really terribly damaged by these public policy decisions of past governments.
So there's another question from Keith Hay. To Bill 218, the bill that actually insulates the long-term care sector from the lawsuits. He's asking whether or not, and I know you're not a lawyer, but he's asking whether or not you think that Bill 218 will survive what he thinks would be the inevitable legal challenge. Do you know if trade unions, for example, or other interest groups are getting ready to challenge the constitutionality?
I'm coming down.
I have, in fact, even asked a lawyer friend about exactly this.
Did you hear me?
I read Bill 218. It's a 2-page bill, by the way, and I encourage anybody to just go and have a look at it. It's absolutely appalling. And I had the same thought, like, surely a government can't do this, can't actually just by stroke of a pen strike out potentially hundreds of millions of dollars of liabilities where these companies owe these people money. And I think the only reason they would have passed this bill is because they know that there were going to be successful lawsuits. If they really didn't believe that was the case, why would you need the bill? So they knew this was coming. Hundreds of millions of dollars was at stake. And in a sense, you could argue, I've argued that this is a kind of a bailout. Like these companies took terrible risks, put their residents and their workers at terrible risk, and it blew up in their face. And they now owe these people and their families a whole lot of money. And what did they do? They go to the government and say, can you help us out here? We messed up. We were irresponsible and reckless in how we staffed our facilities, and people have died, and it's as a result of our negligence, provable in court. Can you please pass a legislation that will get us off the hook? And what did the Ford government do? It's exactly what they did. So my first question was exactly the same as the questioner. Surely this can't be legal. Surely this could be challenged. And unfortunately, the first answer I got from a lawyer friend was, legislatures have a lot of sovereign power. And unless you can make a case that this is unconstitutional, this is a violation of charter rights, it will stand. So I was very disappointed to hear that, but I still hope, and this all kind of relates. I hope, in some ways, I can't believe that Mr. Ford got away with this after we all watched him in May, tearing up and reading the military report and acting all concerned and saying, we will get to the bottom of this. This is a broken system. We're going to hold people accountable. It's just appalling. And I'd really like to think that even a lot of people that voted for Mr. Ford and were convinced that he was a caring guy, if they saw these details, they would be appalled at what they've just done. So I don't know if that answers the question, but unfortunately, that's my negative answer.
Okay, Eric Lilius has a sort of related question that he posed about your comment that the Ford government is really not much influenced by public opinion and can't be influenced through lobbying or pressure, at least from this side of the coin. You've indicated that they're very responsive to the employer side of the long-term care sector. What do you think about the susceptibility or the openness, let's put it that way, of individual members of the Progressive Conservative Party? You think that they would be in any way, shape, or form open to any kind of public pressure that a coalition could put at their doorstep?
It's an excellent question, and I don't want to sound too negative about it. I'm, as I've said, skeptical about the integrity and the real commitments of at least the leadership of that government. But I don't know all of their caucus, and frankly, as over the years, I've learned more and more about how centralized a lot of decision making is, even in a legislative environment like this. And my guess is, I don't know what your representation is like in Haliburton in the provincial legislature. I expect it's probably pretty PC. But my guess is, if you were to actually gain an audience and have a conversation with a number of local MPPs that aren't in cabinet, aren't well connected, I'm betting you would find that they know very little about these things. They've been given some speaking notes about Bill 218 and maybe other things, and they will just read the speaking notes. But I don't know, conversations that got past that reflex of reading the speaking notes and into people's kind of humanity, I'd like to think that some of these people might be reachable. And I would always say it's certainly worth a try. So that gives us all, including you folks in Haliburton, a number of potential targets, or I don't want to say target, but potential interlocutors for conversations, for pressure, for dialogue about exactly this. And I hope, as people learn about Bill 218 and people learn that, apart from the press conferences and emotion that we've seen from Ford and others, the reality of their agenda is more represented by a bill like this, that people will become motivated. The more people learn about this, I think, as I say, even a lot of people that aren't very politicized, and maybe a lot of people that voted for this government, they might realize that who they voted for may not actually reflect their own views and preferences. And I'll just add one point. There's been several polls taken since May about proposals to put all of the for-profit long-term care into public hands. And it's amazing the level of support. I've seen it range from 66% to 84 or 86% in different, serious, real polls. So this is something, and I think that cuts across all political, voters for all the parties. It's not just, NDP voters or Green Party voters. It's members of all parties actually support that concept. And I would say that support, if anything, has probably only grown in the context of the pandemic. So, it's going to be interesting, because I actually would argue that the gravity of this terrible pandemic and the tragedy that we've been watching, I think it's going to make it much more difficult for defenders of the existing system to just say, oh no, this for-profit system, it's fine. There's no problems. We just need to, give it a bit more money or create some standards, and, the rest will flow. I don't think that's going to fly with too many people. I certainly hope it doesn't.
I just wanted to add a comment that Bonnie Rowe put in the chat box to the effect that I believe it's the coalition is going to be is going to be organizing a trip to the legislature in February in an effort to try to lobby for, I guess it's to amend the Canada Health Act to expand it to encompass long-term care and other congregate care operations. So she put that in the chat function. Now, John Smith has put a comment in here, or a question about that I, as a pension trustee in a former life,
Yes.
got the privilege of being able to answer all the time from plan members who were very concerned about the financial health of the pension plan and wanted it to earn the highest rate of return possible, so as to guarantee the best possible outcome for his pension benefit or pension benefits after retirement. What John is asking is that, given that it's in all of our interest that pension plans, on which most of us will eventually depend, make money, isn't it better that these plans make money from these public services as opposed to just private investors?
Yeah, I kind of understand. I think the thinking behind that. It's like, well, if this is going to happen anyway, and the profits and the returns are being pocketed by, the wealthy or corporate investors, if it's going to happen anyway, why don't we get in on this action? And I kind of understand, that logic. But as I've said, the problem is that logic works until it starts to hit us, until we ourselves actually start to see and feel like our direct interest is being threatened. I'll just repeat that example that I gave of the OMERS investment in Thames Water. So what was happening there is Thames management over in the UK was basically proposing to their unionized workers that they give up their pension plan, essentially, and have it replaced with like an RSP system that has no security. And, that was being done in order to increase the profitability of Thames Water, and the profits of Thames Water would be passing over the ocean into the fund of OMERS and help to pay for, OMERS pensions. And you could argue at one level, well, isn't it at least good that those municipal employees in Ontario are benefiting from that profit making in the UK? And at one level, you could say, yeah, that's true. But the problem is, this is a very globalized world, and the wave of pressure to get rid of all pension plans is snowballing. And to the extent that there are employer victories in getting rid of decent pension plans at Thames Water and in other industries in the UK and in the United States and in Alberta and in Nova Scotia, like, at what point is it going to come to Ontario? And Ontario municipalities are going to say, well, why are we paying these costly, secure pension benefits to our municipal workers? I mean, even our workers' pension plan in the UK is getting rid of defined benefit pension plans over there. Why don't we do that here? That actually gives them more of an argument about the logic of getting rid of pension plans. And then, of course, at that point, the OMERS members would say, oh, no, we meant over in the UK. We didn't mean it should apply to us. So the point I'm making, of course, is one of, basic solidarity. If we think healthcare should be public for ourselves, we probably think it should be in the United States and in the UK and in Chile and everywhere. And the same thing applies to pension coverage and any number of water ownership and control. And we could probably build a broader list of things that we think should not be touched. And the last thing I should just add in, that's not an argument. I'm not making an argument for like lesser pensions. It's a separate discussion, and I didn't have time to get into it, but I make the argument that we've all been convinced that our decent pensions and pension benefits can only come from the returns we generate on financial markets. And if we're not able to get those returns on financial markets, then we're going to have a terrible pension. And my answer to that is, well, have a look at the old age security pension, or what we call OAS. What is that pension fund like? Oh, well, very interesting. There is no pension fund. There are no financial markets. That pension plan is not financialized. And in fact, it's very secure because it's generated out of our tax system. It's basically a pay-as-you-go system. And that's the same as the original Canada pension plan. It was not financialized. It wasn't roaming the world looking for things to privatize. It was actually the small reserve fund of the original CPP, as I think, Terry, you probably know, was actually loaned to provincial governments to help them build public infrastructure on a cheap, low interest basis. This is a fabulously pro-public, good for taxpayers even. It made government cheaper and public infrastructure cheaper for all governments. So I'm just tacking that in to say, I think we've been sold a bill of goods to get us thinking that, having a decent pension, having a decent standard of living in our retirement is dependent on profit generation through whatever means the Wall Street and Bay Street are able to figure out. And one of my main arguments is that thinking has got us to Revera and to the 407 and a number of other really terrible situations. And I think we really need to rethink this.
Okay, we're coming to the end of our question period. I think we got just a couple of minutes left. A couple of things. One is that you've mentioned some things in terms of resources. You mentioned the study that was done through York University at what's Pat's last name again?
Yeah, Pat Armstrong. Yep.
Pat Armstrong and so on. I've put together a resource list, and we'll be sending that out to all the participants. And so there's going to be some good resources. If anybody wants to take a deeper dive into any of the things that have been mentioned tonight, that resource list will have would be a good place to start. So I'm going to end by just talking about, just mentioning something that Andrea Piercy put in about building coalitions. And I think that this is in the framework of a minority government situation where the government is dependent on support from other parties. Mm-hmm. And you would think that at this point in history, with the NDP and the Green Party and the Bloc to a large extent having progressive social policy, yep, there ever was a time when we could force or pressure a Liberal government to do something on the Revera thing, for example. Wouldn't you think that this would be the time that coalitions could be built between progressive political parties, and that pressure could be then applied to make some real gains given the political circumstances? And I just want to put that to you as a final comment. Are you optimistic that if we get our act together and if people put the pressure in the right way, we can move the yardsticks on things like Revera?
I do, and I appreciate the question. And as I tried to say at one point, in this particular circumstance, I do have a measure of optimism about this issue, because we have been watching so painfully this pandemic unfold and the serious circumstances that's unfolded in long-term care. I think there is potential, as the question suggests, in immediately broadening coalitions and creating a bigger and bigger tent on this issue. And I guess as we do this, and I'm actually actively involved. In fact, I can say I hope there's one component of this Make Revera Public campaign effort that I think is going to become public in the next couple of weeks, with a video that's going to, like a short video about the issue that's, I expect, will be circulated widely on social media. So watch for that. I think there's tremendous potential, and yes, precisely for the reasons that the person has identified, the configuration of the federal parliament does give us some power and leverage that we might not have had under a majority Stephen Harper government or whatever other, even a majority Liberal government would be different. So I just want to be encouraging to for all of us to think about who might be potential allies. Yes, maybe the Green Party. I don't think the Green Party, I think maybe an MP has spoken about it, but I'm not sure they've articulated as clear a position about this Revera issue in particular as the federal NDP has. But yes, I think they may well, if approached the right way with the right information. I think that would be a great breakthrough. And the only thing I'm adding to the picture is if we can make headway on this and bring pressure specifically on Revera and the for-profit long-term care, I think this could be a key moment for raising profile and attention on this larger problem of what pension funds are doing in our name and on our behalf, that I think also really needs scrutiny and really needs attention.
Okay, we're going to have to leave it there. I think we're over the clock. So I want to thank you, Kevin, for doing this tonight and spending the time sharing what your research and the the content of that book. I know you've boiled it down, and I really would recommend to people to have a look at the resources that we're going to send out. There's a couple of interviews with Kevin at the book launch. For example, and there's even a Planet Halliburton interview with you that people might want to take a look at. So with that, thank you very much. Really appreciate the time that you've taken to be with us tonight, and I enjoyed it immensely. I hope everybody else did.
Okay, well, thank you very much. I appreciate that so many of you had the patience to sit through such a lengthy talk. And I read your website. I see the kind of activity that you're all involved in. All I can say is I encourage you. I appreciate your work in Halliburton, and hopefully we can cross paths again sometime in the future.
Perfect. Thank you.